guys hear me all right? I know you can't see anything yet. This is just a sound check. Sound check. Mic test, mic test. Mic test. Hey, what's up, Kaizen? Yes, let's rock it. That is exactly right. Ow. Hey, what's up, Drew? Can you hear me? In the Discord? Hey, morning, morning. Can you by chance give me a sound check in the Twitch stream? No worries. Kaizen said it sounds good, so I think we're good to go here. Yeah, so you and I will be talking in here, and yeah, if you, oh, what's up, bro? Can you hear us? Yeah, it'll be easier to just do that, and we can all chat just through here. So I'm gonna leave the starting screen on here. I'm gonna give it just a few minutes. I'm just fixing some technical. I don't know what happened to all my voodoo lines. They all got corrupted or something. I had to fix something. But I just want to do a sound check there. About 5 minutes or so, we'll get this going. So Kaizen, I think, is the only one in there right now. So I hope you heard that, Kaizen. About 5 minutes, and we'll get going on the market overview. So yeah, 1 second. Here we go. I think we are locked back in. Okay, hello everybody. Welcome, welcome to another MKNAOMII stream. I see we have a couple people in here. Welcome, welcome. All right, my boys in the Discord, y'all there? Cool. Can you guys see stream all right? All right. Now I'm thinking, should I stream this also on Discord so that you guys have live incoming stream? Talking to you, Rob. Nah, I don't think it will. I don't think it will. Yeah, this is kind of an interesting change to my rhythm here, so bear with me. It's good to get back in the flow, though. And I don't know if you guys know, but we have the JTC OPEC meeting here. Oh, what's up, guys? Doing better, man. I'm doing a lot better. Thank you for coming in. Uh-oh. Did I just sign out? Sorry about that. Oops, sorry about that. I missed what you said. I accidentally signed into a different account. Sorry about that. By the way, we did just get the, or we're getting a set of US data. Just keep an eye on that, guys. We have ADP national employment that just came in. Going into the jobs number on Friday. Lean Productions at gmail.com. And then, yeah, so we have the JTC meeting today for OPEC, so keeping a closer eye on that. Oil today. Okay, here we go. Multiple streams. Okay, now you guys will have it live. I'm just going to mute Chancellor Merkel here. Okay, cool. So let me get my pen out as well here. Kind of start showing you guys how I'm looking at this. I mean, so those in the Discord and whoever watches this back on recording, there are individuals in the Discord who've been working with me for a while, so they understand like my process here. So obviously if it's redundant to you guys, I apologize. When we get more viewers, it'll make more sense. So we're getting a tweet out of Amina Bakra, who, for those of you that don't know, you definitely need to follow Amina Bakra. She's the head of basically all OPEC-related press reporting. So anything she says, anything she does is going to potentially give the market intel that is informative and potentially market moving. I'll pull her up here. Make sure you guys know how to spell her name and everything. right, so here's her Twitter account. Amina Becker, Deputy Bureau Chief and Chief OPEC Correspondent for Energy Intel, ex-Reuters. So yeah, she basically covers all policies related to OPEC. So all market participants are listening to her extra diligently today, given the fact that we have this JTC meeting. So yeah, we just got this tweet that the UAE energy ministers will not be attending the JMMC due to other commitments. So nothing really that impactful quite yet. But essentially, we did get some comments out of the JTC yesterday saying that there was no commentary to be made on the development in futures prices on the crude oil contracts. Essentially, the comments stated that they believe the price of oil has gone up so rapidly due to speculation and financial managers, quote. So that's kind of them saying that it's not due to fundamental. Well, they stated that it's not due to fundamentals and it's due to basically speculation. And I could pull this source up real fast so we can kind of fact check this. Just pull up my terminal here. Basically, for those of you that don't know how I run this, I've got the Reuters running news headlines here. So I'm just filtering out OPEC-related discussions that have been coming out, trying to isolate important items going into today's initial decision of whether or not there's going to be oil output cuts. So yeah, here the JTC says makes no recommendation for the oil output decision. That was yesterday at 11:35 a.m. Here's the comment I'm mentioning just to give you a source here. So this came out of Reuters yesterday. So a panel of experts of the OPEC and allies known as OPEC Plus believe a recent oil price rally might have been caused more by financial players rather than improvements in physical oil market fundamentals. An OPEC Plus document showed. Experts called for cautious optimism due to the underlying uncertainties in the physical markets and the macro sentiment, including risks from COVID-19 mutations that are still on the rise. So kind of reading in between the lines here that, all right, if they say that this is being caused by financial players rather than improvement in fundamentals, then that would tell us that the market has already, well, we want to assume that the market is trying to price this in. For my technicians out there, for those that have done any studying on chartered market technician, essentially when we see these types of fundamentals, what they tell us is the future, and the market wants to price in the future, not the present. So I do believe that the recent decline in oil is likely due to technicals and kind of the understanding that going into a meeting after a large rally in the general commodity sector, there could be an explanation for this pullback. Yeah, it's actually good you bring that up because there's another comment in here related to Contango. And again, for those of you that don't know what Contango is, it's essentially when, and I guess I'll back up here for people that watch back the stream. If you've never traded futures before, obviously I encourage you guys to go check it out in terms of what they really are on your own, just Googling the general understanding. But to make it as simple as I can in kind of a quick snippet, these contracts get traded in order to lock in the price of an underlying asset. The asset in discussion right now being crude oil. When producers, money managers, speculators of the like participate in these contracts, they can buy the contract for this coming settlement, meaning the most recent contract. That's what we call the front month, or they can buy the month ahead, which is going to be the futures forward contract. Or let's say we're kind of like right in the middle between the current and the incoming. As we roll over, we would still assume the contract that we're coming off of is the backwardation, or excuse me, the back contract. So essentially, prices can diverge or converge related to how the future is pricing in the change in these commodities. So backwardation is when the current price of the asset is higher than the price trading in the future. So if you were to look at the front month contract of crude oil right now, and I'll show you guys a free tool that everybody can use. You just go to CME, crude oil, literally just put that into your browser. It'll bring up the Nymex WTI crude oil futures. And you can click on the link here that says volume. And you'll see here a nice table full of information. Not only does it give you the volume on the current day, but it also gives you the volume on the current contract. So the April contract right now is currently trading 464,000 contracts, while the May contract is trading 149,000. So the front right now is the April, and the May is the futures forward. And then as we get closer to April, we'll kind of be smack dab in the middle, and the current contract will become April, while the front month will become May. I guess you could call the front month May now, but most of the volume is on the April contract. And just to note, also for those that don't know, you'll notice that futures are typically marked with a letter, and this is going to represent those months. So right now we're on the April contract, as you saw, we were trading 400,000 contracts. So that's going to be the CLJ. And if you want to learn more about that, you can check out my videos, hit up my link, and we can get it deeper into it. But essentially, on the topic of what Ro just mentioned in terms of output and the futures forward development, we call that a contango. So backwardation is when obviously the current contract is higher than the front month, so that would mean that April is higher than May, and then contango would be the opposite, where May is higher than April. So for any viewer that just digested that, it's pretty clear that this world can get a little complicated. So here at MKNAOMII, we'll constantly try to kind of give you that rundown and hopefully provide some insight into some of the more lesser known items here in the financial markets. Hold on, I'm getting something out of Squawk here. Got some Canadian data coming in here. Nothing too impactful. I think it was a backwardation comment I'm looking for. JTC says, notes widening backwardation of major benchmark crudes and increasing net long positions in the financial markets. Okay. So, the first thing that tells me is that we should actually go check out the spread on all of these. And we could just do that by pulling up some trading view charts here. And for those that don't know how to do this out there, it's pretty simple. So let's say you create a new chart loadout and you want to compare the spread of multiple futures contracts against each other. You can go ahead and put it on a daily chart, set it up so you have a line chart, type in your first contract, which is CL. I'm going to get rid of this. change this up a little bit because it's kind of nasty. You'll learn that I'm very particular about my charting. Okay. So this button up here for TradingView users, or excuse me, this button right here, the plus button, it'll say compare or add symbol. So you can type in CL, click on the CL2 because you want the May contract to be shown, and then let's see, why did I, oh, it's probably the same color, that's why. Let's see what's going on here. Indicator titles, there's your CL. So weird, what's going on here? Oh, 1 second here, guys. I have a cat, and he's on the counter right now. Okay. My cat is so manipulative. He's on the stove right now while I'm doing this stream, and he knows I'm on stream, and he knows I can't yell at him when I'm on stream. Yeah, straight away. Okay, there we go, I fixed it. All right, so we can see that CLJ's basically trading at, get this right here with the percentages, pin this to the right. See, get a smaller time frame to get the spread right. CL1, CL2. Don't need that one. So there's only a 20-cent contango right now, or backwardation right now. So the J contract is currently trading at $60.40, while the K contract is trading at $60.21. So this is just your spread here. So we would call this a very, very marginal backwardation. So hopefully that makes sense to you guys. And why we cover these topics is to just reiterate the importance of understanding your products well. I'm not going to get into much more on that end. We're going to start looking at the structures of this current market relative to these fundamentals that I've mentioned. But I just want to close out that little discussion in the commentary, or referring to the commentary here, saying that widening backwardation of major benchmark crudes and increasing net long positions is what they're kind of keeping an eye on. So when they say major benchmark crudes, they're also referring to the Brent contract. So for those that don't know, just to kind of finish this up, Brent is a separate futures contract related to oil that runs globally, but mainly in Europe. Not so much in the US because we have WTI futures. So crude is usually about, or Brent crude is usually about, I want to say $2 to $3 off. Let me get this percentage right here. So yeah, it's usually $2 to $3 higher. And by the way, for those that want to know what I'm doing here, I'm just taking all of these spreads that I just set up and I'm allocating them to their own scales. So if you right click the chart symbol, you can pin to scale, and you can pin to either the right or the left, to just get that price. So you can see there on Brent's J contract, April contract, we're about $3 or so higher. So that is also one of the spreads that they are watching as they widen. So Brent is currently leading us. It's usually always leading us, and WTI is basically catching up. So if Brent rallies to 65 per se, then of course WTI is going to rally to 62 or so, 63. And there are times when this can be a potential opportunity. There are futures traders that trade on this strategy and implement and deploy this strategy. It's called a backwardation or contango strategy, where if you see a discrepancy, a large divergence or a large convergence, and you want to express that, you can do so by participating in either contract or just in both with the spread. And that is a deployable strategy. So keep that up. So what I'm going to do, I'm going to run through the technicals here, how I usually do on a larger time frame. We're going to go to 9 hours. And the reason we're doing 9 hours is due to how well these candles line up to kind of these time triggers, if you will. So when I say time trigger, I'm referring to the ideology that markets are very driven by the time of day relative to whatever contextual landscape is in play. So given that we're discussing crude oil and the JTC meeting today, we are expecting a little bit more velocity and volatility and volume, while also expecting to see some sort of pricing in on any potential new commentary. So you could see that this little blue candle right here that opened at 59.50 last night starts at 1800. So 1800 being the Globex open, the beginning of Asia trade, the beginning of Australian trade. So this is when markets begin their first opening drive, if you will, on each day in the futures market. And this next candle is at 3 a.m. So that's a really important time as well, because that is when the European cash equity open occurs. So the DAX, the Euro Stoxx 50, the CAC 40, the IBEX, the FTSE, everything opens out there in Europe, thus giving some volume to these other assets, including crude oil. So this helps us as traders understand where the price range is right now. And as you can see, pretty much over the last 2 days, we've been ranging between 61s and 59s. After we got this nice down leg of roughly, we can measure this here as roughly 7% decline over the period of about a week and a half. So this should be noted as something that is pricing in technically and fundamentally. I'm not going to get too into technical analysis today. What I'm going to more so focus on is market profiling and the structure, how it's seen parallel to a traditional candlestick chart, because most people here on the internet can go learn a bit about candles and technical analysis on their own if they haven't already. We're going to highlight these more professionally used tools, while also jumping into this guy here, which is your order flow ladder. So the first item, I'm going to grab my Epic pen here. By the way, this is a free tool. You can get it on the internet, obviously, and it is available to you for free. It's not going to have all of the boxes and circles and arrows on the free version, but you will have at least a pen to annotate. So before I go any further, it's so important that you annotate your charts as you're going forward, due to the kind of the parallel of when you write something down, you remember it much better because your brain is sort of connecting and solidifying the thought. So the same goes for markets and market analysis, at least in my opinion. So I come from the school of thought that we're going to set areas with boxes that define a certain potential outcome from the price entering these boxes. So I'm basically going to highlight the bottom of the current price range here with a red box to explain the red zone, if you will. So the red zone is just saying if price gets into this area, it's giving a chance to sellers to initiate the price lower. So we're going to go ahead and call it the bear zone. Who just jumped in? Oh, what's up, Hamala? Hey, Vic. So we're running a Twitch stream right now. I don't know if you saw some of the messages that I put in the chat. Cool. Just wanted to make sure you were in. Yeah, cool, perfect. I just wanted to make sure you're on the same page. So, good morning and welcome. And obviously, some of this stuff's going to be redundant to you guys, but hopefully, some of it helps. Just to kind of solidify all these things that we focus on every day. So you can see I've drawn this bear zone down here. My face is kind of in the way of it, but it's essentially showing us between 59.66 and 59.26 is a imbalance down. And I can actually hide the pen real quick, and what you'll notice is there's this vertical line that is being highlighted by my little cursor here. And what it's showing is a white vertical line between 59.95 and 59.63, and then at 59.63 it turns purple. When you go down to 59.26, it turns blue. So what is that? Well, that's initial balance range. Initial balance range is established during the first 5, 15, and 30 minutes of trade every day. So you'll notice that my profiles are actually color-coded. And we'll move this up a bit so we can see it a little better. And I'm going to explain this color coding kind of briefly because I don't want to get too off topic. But essentially, it's just showing us the different times when markets are opening. So yellow is the beginning of the day, being 1800 or 8 a.m. Asia. Red is kind of through the Asia session. Blue is Europe, so 3 a.m. to about 6:30. The white print is the 6:30 pre-market through the 9:30 opening bell. And at 9:30, you'll see the bars turn purple. And that's why on the previous day, the bars turned purple at 9:30. So this just helps me quickly color code my mental compartmentalization of time, because this whole discussion is about the importance of time relative to what is going on contextually, which is OPEC meeting. We've got job reports coming out on Friday. We've got a little bit of a muted price action throughout the market as a whole, with the exception of I could see gold got cabooshed this morning. More so just trying to kind of solidify what is going on here in terms of this OPEC development. So initial balance range is going to help us develop those bear zones. So the imbalance down here that's represented through the prices that I just showed you of that initial balance range are going to be our bear zone. So if sellers get price into this area, that doesn't mean that we're just going to start throwing short selling onto it. It means that our observation of price action and order flow on the ladder and the overall footprint of the market is going to become, we're going to become more diligent and more focused on that, because it could lead to an auction change, a change in auction activity. And if the stuff I'm saying just sounds like absolute gibberish, keep following, keep hitting us up. We're going to build a Discord out for new folks to be able to come in and learn some of these subjects more diligently. But hopefully, for the most part, this is making sense. So I'm going to go ahead and grab a blue box here, and I'm going to highlight not an initial balance range from today, because if I were to highlight the initial balance range high from today, then it would look like this. And I wouldn't call this a bull zone right now because we've already breached through it. If I had drawn this last night when we had opened here, and that's what that little marker shows, is that's the open of cash trade or Globex trade, then that would indeed be a bull zone. But right now, we kind of want to call it a zone in the sand. So what I will do is I'll make a white box around here, and it's essentially balance right now. So we'll just do this, which means zone in the sand. And what this means to us as traders is when price enters this area, it's essentially a balanced market. So for anybody that's studied market profile theory, or anybody that hasn't, you know, equilibrium, right? People, when they buy and sell things at value per se, there's a certain agreement at some point where people are willing to transact for that asset at the same relative value. So this same relative value right now is about $60 through $59.60. So if you go to the supermarket Monday, Tuesday for the whole month, and one of those weeks you come in and your favorite item, whether it's the apples, something in the produce, something in the meat section, if that item that is your favorite that you like to buy suddenly drops in price dramatically because of a sale, you are probably going to bid it. You are probably going to want to buy that item. So that would be an extreme outside of value, where if you're there every other week and that thing is priced the same, relative same price, that's the balance. So when that imbalance occurs down or up, there tends to be a demand that appears. And in the financial markets, since we can participate on both sides, we're not just buyers, we can also be sellers, this allows for a little bit more of an interesting sort of landscape of auctioning. So again, if we get back into balance, it's going to mean that we're going to look for a difference in auction activity. The way that we watch balance trade is going to depend on how much volume is in balance. So right now, you can see that there's a decent amount. I mean, what we call the point of control is currently sitting at balance, and that's at that 59.90 through 60 level. And the reason that we call it the point of control is because you could see that this node here, it's a protruding node, and what that represents is volume. You know, if you were to flip these things horizontal and you were looking at a traditional volume bar, like the ones you see on the left here, it's the same concept, saying that this is the area where the most volume traded. But what we've done is we've basically created an optic to see what exact price is seeing the most compression of value on the given session. So this session being obviously today, Wednesday, crude oil, and it's the March 3rd. So March 3rd, crude oil, that's what you see on the current contract in terms of volume. So now that we've got that set, we're going to go ahead and set ourselves up with the bull zone. And again, that doesn't mean that like we're just going to buy it if it gets up here, but it basically tells us to watch for people who are interested in bidding and increasing the value of crude oil. We want to watch for them to either participate or to show a lack of participation. So this bull zone is going to be cut off basically at this node, and this is kind of discretionary because you can see there's no initial balance above here. And the reason I chose this was you could see this little pocket of volume there from 2 days ago, Monday. So you can see on Monday we did a pretty strong decline with very little volume trading through here, and that's what we call a single print, meaning that literally barely any volume traded there. So that vacuum there is kind of a point of interest right now for bulls. And you can see that bulls ended up probing that this morning in Europe, because remember the blue color is Europe. So this quickly gives us context as to where price has been today and how price is reacting to where it's been, where it hasn't been, and where it is trying to go. So obviously my boys in the Discord know this, but you're going to hear me repeating this all the time. Markets like to move to liquidity, so that would be the node here. They like to move through liquidity, so that would be this single print, this weakness, if you will, where there's not a lot of interest for buying or selling, and to liquidity. So when you move from, let's say, this node here of strong liquidity, and then you move through and you end up establishing liquidity down here, you're moving to, through, and from liquidity. And that is the structure that markets create all day long. So this is just a simple way of breaking it down with balance and imbalances. So the imbalance up being the bullish zone, the imbalance down being the bearish zone. And I'm not going to do a whole lesson on market auction theory today, but again, going back to this analogy of you going to the store and buying an item, and that item is for sale one day. If you showed up one day and that item is suddenly skyrocketed because of inflation, there's a chance you might not buy it compared to when it was lower in price and you were like, feverish to buy as much of it as you could. That psychological fluctuation that price creates is why markets tend to move through liquidity quickly. And that brings us to the discussion of how we use these tools to monitor volatility. And volatility is obviously a very important part of trading in the intraday markets because volatility represents a lack of liquidity. So a lot of people associate volatility with fast moving markets that are selling off. People commonly associate it with the VIX. I see a lot of discussion about that on the general internet. But what people don't understand is that volatility is by definition a lack of liquidity. So if, again, we're going back to this idea that you're at the store, let's say you and a bunch of other individuals who like the same item are at the store with you. Let's say that the store is starting to run out of the item that has been on sale. Let's say that item is only, the inventory only has enough to satisfy a quarter of the customers who are currently trying to buy it. That is going to create either immediate demand by the customers who have the money to pay for it, or it's going to create an auction. Obviously, a supermarket doesn't have an auction, but let's say that you can auction a higher price. You can basically outbid the other person. That's creating a fluctuation in where people are willing to pay and where people are not willing to pay. So if all of a sudden the price of something is no longer valued at what it is trading at, so if something were to occur that says, hey, crude oil is not worth $60 right now, let's say we get a comment out of the OPEC meeting that says, we are increasing oil output up the wazoo. We're going to do 10-fold barrels per day. Unfortunately, that's just how it has to be. That's where the market is going to become volatile because people who were willing to pay a certain price are going to pull that liquidity and create active price fluctuations. And that is what volatility is. So we can monitor that direct, through the ladder. And for those of you that have never seen this item here, or this tool here, it might look extremely complicated and just like almost intimidating. I know that when I first saw it, I was intimidated by it, but it is a crucial tool in the success of intraday trading. A lot of people get involved in the financial markets with charts. Not a lot of people get involved with these two here, profiling and ladder. And the reason that these are so important is because it puts context to the actual structure of the traditional charts. So as you can see, we're trading within this candle. Well, what is going on within that candle? that's what you're seeing here. And to explain exactly what each of these columns are showing us, I'll take some time here to go from left to right like a book. And if there's anybody in the chat that doesn't know, or if you watch this back and you don't know what that is, feel free to send me a message and I'd be happy to get into it. So on the left here, we have price, obviously. So you can see $60.62 goes bid, $60.64 goes offer. You can see that same exact price here as it's moving through to and from the liquidity. Every time the blue column is filling with numbers, that shows that somebody is bidding. So the blue column is people who want to buy the market. Now, I should reiterate, and I will reiterate this a lot, just because you're a buyer doesn't mean that you're making money. I mean, obviously you could be down and you could be, so if you're a seller, you also have to be a buyer is what I was trying to say. So if you shorted this market, let's say down here at 60.43, in order to get out, you still need to buy it back. So buyers who are in this market are not necessarily all just buying sort of organically. They could already be in the position, or if they're already long, they could be scaling in. And not to make things too complicated, but the purple column is going to show the offers. So the offers are the people that want to sell it to them, to the buyers, right? So, this little 43 lot that's fluctuating at 60.74 is basically offering to the people at 60.72, 60.73 that he's willing to sell it to them, or she's willing to sell it to them at that price. And the buyer has to lift that offer. If the buyer wants to buy 2 ticks below at 60.72 or 60.71 and the seller doesn't want to budge and there's no other buyer, then there's not going to be a transaction. And that's what you're seeing. So we are reading this diagonally, just to reiterate. So I'll show you guys here. If I put a square around the two columns, it is almost as if we're seeing buyers go into the offer diagonally, and we're seeing sellers go into the bid diagonally. So we lift offers and we hit bids. So just like some common nomenclature within experienced market participants, we're seeing offers getting lifted right now on crude, obviously, because we just went about 60.10 all the way up through 60.70. So this is a lift. We're seeing offers getting lifted. I hope that makes sense. You'll notice if you spend enough time around here that there's a lot of nomenclature and just overall market discussions that can sound confusing. So please feel free to ask questions because I know it can get dense. The bid is the blue column, the offer is the purple column, and on the right there is the volume profile. It's the same concept as what you're seeing over here on these volume profiles. And they're just showing us where the most liquidity has traded relative to when we opened the ladder. So when we opened the ladder, we were trading around 60.26, 60.47, and we traded roughly about a couple, 5, 6, 7, 10,000 contracts between 60.45 and 60.38. So that protruding there is a node, right? That tells us that much liquidity has traded there relative to, say, here, where there's a very thin amount of liquidity, meaning only 141 contracts were willing to transact there on that singular price, versus at 60.43 where 1,000 contracts were willing to transact there. So we're basically compartmentalizing all of the information that we're getting in real time, and that's a part of this skill. Is you have to learn to compartmentalize developing information in the auction. That's what this is showing you, relative to the structures that you have available to you. So, the average uneducated market participant isn't really going to be able to do much until they understand how all three of these tools work, at least from our methodology here. And we say that because how can you possibly know when to buy or sell something based on a candle that prints after the fact? right? Because right now, this candle hasn't closed yet, and everything that's going on within this candle is visible to us. It's order flow that we're seeing, right? So it's kind of interesting. Last night I was watching the hearing that was done on the GameStop frenzy recently, and one of the congressmen asked the owner of Robinhood, if I'm a Fidelity customer or I'm a Robinhood customer, is there a difference in the execution that I get in terms of quality? And obviously, the Robinhood CEO kept dodging the question, but I'll give you a direct answer. Absolutely. So if you do not pay for commissions and you pay a very low price to trade and you try to, let's say, participate in a derivative related to crude oil, Robinhood has order flow. They have these tools as a broker, but since you're not paying them for a, let's call it favorable execution, they're just going to get you in where they can. Versus Fidelity or something a little bit more, let's call it seasoned, will give you a much better execution because you are paying for it. So this business is all about you pay what you get for. I messed that up. You know what I meant to say. But, if you pay for order flow, you are going to get a much greater edge in your execution. So I can see now exactly how this candle is being built. I can see exactly what kind of volume is being built relative to yesterday's volume, and that is an edge. So that is why we are building structures out here in order to understand why the price is trading the way it is. And that is a part of your development as a trader. You have to build pattern protocols around these tools, because it's not like, if we buy this ladder here, as we call it, the price ladder, we're all of a sudden going to be able to make money because we can see all the orders. We're actually learning how to read the way that this contract usually trades. So you can see it moves pretty quickly. This is due to the fundamental landscape, obviously the JTC meeting right now, and it's due to just the overall time of day. Right now we are opening the Nymex Pit. And for those that do not know what that means, let me go ahead and cover that real fast. If you just Google crude oil, and I use this really great tool or website, if you will. It's a website called Daniel's Trading, and they just provide really concise information on products at the click of a button. So you can see here on danielstrading.com, they just tell us what crude oil futures are. I'm not going to get too into this right now. We'll kind of allocate a separate video for this, but essentially the contract represents 1,000 barrels of oil, and you're playing hot potato with that. You are not actually trading these oil barrels. If you are irresponsible about your knowledge of futures, you might end up with someone knocking on your door offering you 1,000 barrels of oil that you own or you owe to someone else. And I'll kind of spook you with that if you don't know any of these futures items here. So you go do your research. But essentially, the minimum price fluctuation is 1 cent per barrel. That 1 cent fluctuation, as you can see here on the right, is representing $10 per contract. So if I go ahead and buy a contract, and it moves up one, then I'm going to make $10. If it moves down one, I'm going to lose $10. So obviously that is the leverage per cent. Crude oil futures are listed 9 years forward using the following listing schedule. We don't need to get into that. We already kind of discussed that, but you can look out very far to see what people are pricing in the future. There's not going to be a lot of liquid, but you might find some interesting things there. But you can also see here or does it not tell us the Nymex Pit Open? Wow, unbelievable. Okay, well, I guess that's... So, okay, crude oil opens, obviously, every Sunday, like the rest of the market, and it opens every day at 6 p.m. or 1800 hours once you get that break from the close. And the pit trading hours, the original pit trading hours of the New York Mercantile Exchange, or 9 a.m. So what you'll see here is where's my pit chart? This other charting structure that you see here, you'll notice first and foremost that like we've just printed one bar that says A, and I'll get into the letters in a minute here, but essentially if we were to go back to yesterday's beginning of the day in Asia when this contract started trading, it would look the same. If I were to split this, you could see right there, there's that one bar. That bar represents the open of trade. So there you go. That little bar right there, maybe a little bit more difficult to see because I'm kind of blocking it, but this little bar right here is the opening bar. So A is the first 30 minutes of trade. B is the next 30 minutes of trade. So if you have an A and a B print, you have an hour. If that's not making sense, go look into it. But essentially here we have the first 30 minutes of trade getting going. So right now it's 9 o'clock, 9:04 in New York. That is when the Nymex opens, so we're about 4 minutes into the pit session. And this allows for an even more in-depth understanding of how time structure affects a market's price. We already saw that price was fluctuating rather quickly relative to, say, how it was moving overnight at 3 a.m. or 2 a.m. when there was still not a lot of liquidity and there wasn't a pit session open. The pit session not only affects the price relative to the time of day, but it actually affects the price relative to the amount of money that's required to trade the contract. So if any of you have ever looked at the margins required to trade these contracts, there's something called an overnight margin. So if you want to hold this contract through the Globex, you actually have to have more money because their broker is not there. The broker, goes home to his life and doesn't sit at the computer all day at the office. But when the United States markets are open and brokers are open, because they are at their desks able to manage your risk for you, they allow you to have a day trading margin. So that margin is going to drop significantly relative to whatever contract it may be. So in this case, crude oil can now be traded by anybody for a much cheaper price than they were able to trade it overnight. So this affects liquidity, right? It's like if you were to look at the supermarket analogy again, and only a certain amount of people are allowed to come into the market early in the morning, and then when you open up the doors for everybody, it's going to create a different type of market activity. So this is kind of like opening up the market to more participants, because if more people can pay a cheaper price, then of course you're going to see quicker price fluctuations. A lot of liquidity moving and being pulled and added. So as you heard me say, volatility means a lack of liquidity. So you'll notice that all of a sudden the price is slowly kind of drifting higher. It's not like snapping around aggressively, and that indicates liquidity is present. So I don't want to tie buying or selling to this concept, but I do want to reiterate that typically when price becomes less volatile, given the fact that the definition of volatility means a lack of liquidity, when price becomes less volatile and there's more liquidity in the market, more often than not, we tend to see a slower grind up, because it means that people are willing to buy. They're willing to lift the offer slowly but surely until otherwise. So if the OPEC JTC comes out with, like I said, a comment that completely changes the context of how oil is being priced in, then we're going to see liquidity pull. We're going to see buyers who've been long get out, and you're going to get that long side liquidation. And that is going to look volatile. It's going to make the price ladder move aggressively, and it's going to make areas of liquidity and a lack of liquidity points of interest, if you will. So that is an important item when we are getting into these contracts. Sorry, I'm losing internet here on my Bloomberg. What's going on here? I know I don't have a Bloomberg terminal. It's just a Bloomberg TV. I'm not going to flex that. Okay, so as we monitor this, we can see that prices are obviously increasing. We've now breached that so-called bull zone. So that was sort of the moment when you're participating if you're a buyer. And it's not like, okay, just because it goes through the blue box, you're going to buy it. But it's a lot more nuanced than that. It's a lot more related to your experience. But these are the basic foundations that we're covering in this stream on how to structure the market appropriately to see why things trade the way they do. So kind of just in time there to see that lifting of offers through the bull zone. So if I were to expand this profile to make it look more like a regular chart, you can really see some beautiful patterns here where during the European session, you breach into a kind of weaker area. So up here you had this sort of tail that developed during yesterday's session. It was the high of day during the morning pre-market Nymex. So same time as today. You can see that we probed that area this morning in Europe. We ended up pulling directly back down into some of this excess. So you could see that there's not nearly as much liquidity here as there was here. And this means that the market is basically finishing these imbalanced auctions. It's firming up the area of value to ensure that people are getting the prices they want. So when price pulls back into an area of excess and it firms that area up with a low volatility status, that means that there are likely people willing to buy this. And that is what you just saw, where as soon as sellers kind of weren't getting much, buyers were happy to keep buying pullbacks. And now we are seeing a nice lifting of offers into the excess area from the previous day's session. So this type of pattern protocol is what you are kind of focusing on, because if you were to be journaling this, you would be saying, okay, we've gone imbalance up into an area of low volume distribution. So imbalance up being the fact that we left the white box, we went up into an area that didn't have a lot of trade. We passed through an area that had a decent amount of trade, and now we are trading in an area that didn't really have a lot of trade. So once again, moving to, through, and from liquidity. When people buy something, as I said before, it tends to be a grind. So this behavior on the ladder here, where we trade 60.97, 61.01, 61.05, distribute within the range, we will eventually shift value higher and break this level here, or we're just going to go back to balance. And that is a typical function of the market, where once you reach an imbalance on either side of the extreme, if it's high or low, the market has to make a decision. It's either going to extend value into a new area, or it's going to just retreat back to the value that it already established. So this provides for several types of opportunities. And again, you have to know what those opportunities look like. Don't know why I lost internet here on my other computer. recalibration of the U.S.-Saudi relations following Khashoggi report unlikely to lead to any change in Saudi government sovereign ratings. Sorry, I'm just checking through the terminal here. So I just want to reiterate on some commentary that we got this morning out of the OPEC meeting at around 3 o'clock in the morning, Europe Open. So the oil minister out of Kuwait basically said that the oil market supported by optimism that the global economic recovery will benefit from COVID vaccination. So basically the same rhetoric that we're hearing out of the central banks now, seeing that in the commodity realm. OPEC has oil production rollover among options for a meeting on Thursday. We know that. Several OPEC members support the idea of an unchanged output in April. Brent oil, okay. Yeah. Why is my sound so quiet? Can I hear somebody in the Discord real fast? I can barely hear my squawk right now. I don't know if it's something up my headphones. Anybody there? Discord people? Vic? Ro? Schnabel? Anybody? Looks like you're all muted. This darn blue screen always messes with me. Okay, so yep, just waiting here on this meeting essentially, but that's kind of the rundown on crude oil. We're going to go ahead and move into some other asset classes and basically talk about why we go through a cross-market overview. So cross-market overview is essentially what it sounds like. We're looking at the entire set of asset classes, starting with bonds. So for those of you that don't may watch this back and realize, okay, you know, these guys are trading products that I may have not heard of, you know, definitely not seeing this type of discussion on the Robinhood websites or anything like that. This is a very important place to educate yourself because, you know, these markets are extremely impactful on the market as a whole. So we here at MKNAOMII believe that you have to understand the overall ripple effect of the rock in the pond in order to actually have a deeper understanding of what the markets are doing and why they're doing it. So I'm not going to get into like a bond lesson here, but what I'm going to do is I'm going to run through some of these products, just give you a general rundown on what they're going to do to the market if they move a certain way, and hopefully that can give some sort of beginner context here. So here we're looking at the ZN contract. So this is the 10-year treasury note, and this is obviously also a future, just like crude oil. It's a different product though. It represents a different underlying asset. So hopefully this doesn't get too complicated here, but an underlying asset is essentially the real change in the price of this particular asset. So if it's crude oil, it's literally the barrels of oil that money managers and producers have to buy and put into production, or excuse me, put into consumption. So, you know, if ExxonMobil buys a bunch of crude oil and they get it delivered to them and they put it in their, you know, gasoline refineries and they start pumping it out and getting use out of it, then that is obviously going to be the underlying asset that they are trading when participating in the futures market. With these, with the treasury notes, it's essentially buying a government bond that says you own government debt per a certain duration. So in this case, it's a 10-year duration. Now, I'm not going to get much deeper into it because it can get really dense on the bond side of things. We're just going to build technical structures and discuss why this technical structure has an overall ripple effect on the market. So in the current narrative, we are seeing a lot of discussion around yields because, well, let me back up here. What is a yield? So a yield is essentially the amount of return that you are getting on owning this particular asset. So I know this is where it gets dense for people, but you could see on my chart here, I'll blow this up. This is the US 10-year yield, okay? So for TradingView users, this is really easy to pull up. You just go to your symbol search, type in US10Y, and you'll see right there the US government bond 10-year yield. Now what's really interesting about this, the yield is inversely correlated to the bond itself. So, you know, if some of you watch this and you're aware of like inverse correlated ETFs, so like, you know, let's say you were to look at the VIX ETF, that's obviously the inverse correlation to the overall market, the benchmark average, the S&P 500. It's the same concept here, where you're seeing if the yields go up, then of course the bond market is going to go down. If the bonds go up, the yields are going to go down. And the reason this is due to the more people that want to hold bonds, the less the government can pay out a yield for owning those bonds. So when there's no demand for bonds, the government is going to increase the amount that people get back to own them in order to incentivize people to buy them. One second here, I want to test my audio. Why did I lose so much audio here? That's bizarre. There we go.
It's that US and China Security Review Panel a meeting on March 19th. They will weigh investment in China markets and the military-industrial complex. It's that US and China Security Review Panel a meeting on March 19th. They will weigh investment in China markets and the military-industrial complex.
Just note, guys, we're getting a commentary out of the U.S. So it looks like China's security panel and the U.S. security panel will have a meeting on March 19th regarding investments in China out of the U.S. as well as a military discussion. So I'm not going to get deep into the China story right now, but we will constantly provide incoming intel for anybody that watches this in real time and decides that this is important to them. Anybody that watches this in the future, I hope you guys learn and realize that news is a crucial part of trading because it changes context as we develop. So again, this 10-year yield is basically going to show the inverse correlation of the bond market. The bond market is looking at these quite a bit right now due to the very obvious rise that we can see occurring in them. So what has that done to the bonds? Well, as you can expect by now, it has made them fall quite dramatically. So, you know, we were trading up in the 213, 221 range pretty much from August to December. And then on the yearly opening drive after the election, after the stimulus update, we ended up declining back to levels not seen since 2018, pretty much, or 2019, yeah. So we're currently trading back in the sort of economic structure that we were before C19. Just getting a comment out of the British Parliament here out of Chancellor Sunak. So for those of you that don't know, Chancellor Sunak is basically the fiscal version in the UK. So we keep an eye, obviously, on the developments in Britain related to their fiscal stimulus and their monetary stimulus because of the British pound and the correlations to the dollar. So it's dense. So now that I've kind of run through a really brief explanation of what these bonds are representing, let's talk about what they represent in terms of day trading and overall market structure for the overall ripple effect. So, if you throw a rock in the pond of the market, there's going to be a ripple effect. So yields are also important because if stocks continue to go higher and yields go higher, that means that the actual price to earnings ratio is going to change. And I'm not a fundamental analyst, so don't think that I have all this kind of in-depth information on that. But from a very simple standpoint that anybody can understand, when yields go too high, it's bad for stocks. So the NASDAQ sold off last week into the monthly closing range because of yields. And a lot of people retail doesn't really realize that. But if you're an avid bond market trader, you can understand that when yields go higher, then of course stocks are going to have to make a decision on whether that is feasible for them, because it means that rates are being priced in as higher. And to keep it very simple, because I know this can turn into a comatose discussion, essentially when money's cheap, tech thrives, right? So when the Fed is printing money and giving it out and rates are really low, borrowing rates, the amount that a company has to pay to buy money. So if you want to borrow money to keep your company flourishing, it's going to be really cheap these days because of the drop in rates because of the coronavirus. So when yields go up, that means that the market is saying, okay, we are expecting rates to go higher. We are expecting money to be more expensive. Then those companies that have just been benefiting from borrowing that money cheaply are now going to be at a little bit more of a disadvantage, because if they want to keep borrowing, they're going to have to pay more for it. So that is why valuations will drop a little bit. So in this current day trading context, what we're looking at is the same thing. We're looking at bullish, bearish structures relative to how we've been trading. So I'm going to go ahead and draw my lines here again in my boxes. All right. All right, so the bear zone is going to be relatively based off of the initial balance from Monday. I already explained to you what initial balance is. So essentially, you could see we kind of have tested that initial balance this morning with this single print low. And we are now looking at a marginal bounce here where liquidity is kind of trying to hold price. Why is that not moving? No, you're good, bro. One second here, guys. Just going to make sure this is connected. Seeing a weird price discrepancy between TradingView and my current. $133.04. It's like 133.00. Yeah, that looks right. And yeah, you guys can see I've got my pit session here as well. So as we showed you with the Nymex. Okay, so we're seeing a test of the initial balance range from Monday, essentially showing us that sellers are trying to get the market to trade lower, at least in the near term. And then we're going to do our bull zone. Bull zone is going to be based off of the initial balance range from Monday as well. The initial balance range high related to the initial balance range low from today. And your line in the sand is going to be a lot smaller right now because of the price range being so kind of compressed right now. So the line in the sand is going to live right here. And it's not a zone in the sand for this one. It's going to be a line in the sand because it's such a thick market. And when I say thick market, I'll kind of explain that in a minute here by pulling up the ladder for you. We'll just get it open. Insert study. Okay, there's your ladder. 1 second here. Let me just make it look like the one you already saw so that it makes more sense. All right, there's the opening bell here in the US. So the biggest thing that I can already tell you is going to occur if the S&P 500 keeps drifting lower here and the NASDAQ keeps drifting lower here is these bonds are going to drift higher. The correlation is inverse most of the time, not all the time. But now that we've got liquidity coming into the S&P 500, we can see that we're currently trading about 38.62 quarter. NASDAQ's trading 13.28 half, 13.30 range. The Dow trading about 31.30.47, while the Russell trades 22.40. So seeing some relatively muted action. We're seeing a bit of a give back from the overnight gains. So yeah, we're seeing about a 26 handle drop on the S&P since the opening drive on the Globex. So now we would expect to see bonds either start to find a bid and lift some of these offers and retreat back into the balance or the lists, if you will, the line in the sand, or we're going to see these stocks pick back up and these bonds are going to continue to drift lower. Less likely, but still likely, we could see these bonds actually drop with the equity market. And this typically happens when there's a repricing of the general structure of the fundamentals, but we're not fundamental analysts, so we're not going to get too into that. We're basically just going to continue our structures here. So you can see, okay, the bond market is pricing in, let me make this box a little bit less obnoxious here. Why is this? Okay, there we go. So one could say we're in the bear zone now on the bonds. Here's your bull zone. So what I'm watching for on the ladder right now is, are sellers going to continue to offer this market lower and lower and lower? And one of the things you'll notice compared to the crude oil ladder was essentially, it's that these numbers are much bigger than what you saw on crude oil. So on crude oil, we had roughly, double digits between like 60, 70, maybe 100 contracts trading. In this case, we have up to 3,000. Sometimes you have up to 5,000. It really depends, but overall, the treasury market is relatively liquid. And liquidity, like I said, a lack of liquidity leads to volatility. So when there's an abundance of liquidity, it leads to a very muted price action. And if you spend time in the bond market, what you'll learn is it's actually a great market to learn to read order flow. It's a great market to learn how to understand just general technical analysis and general structure, because they are so sort of tamed. Now, of course, I say that after one of the most volatile weeks that we've ever had in the bond market, and we call that a taper tantrum. But essentially, most of the time, these things are pretty quiet. When the narrative hits the yields and you have monetary policy getting involved, you can see a large change. And I'm not going to spew your ear off here about fundamentals and what this all means, but what I am going to tell you is, if the U.S. is putting out all this money to give to citizens, a stimulus, the sovereign wealth of this country is going to be priced in lower than it was before we gave money to a bunch of people. And these are things that a lot of people in my age group don't understand. And I bring that up because that's kind of why we built this channel. Is we want to inform and educate people who don't have access to this kind of knowledge. And hopefully help you make something out of it. Knowing that this is happening in the future will help a lot for people that are interested. Oh, that's what's going on. I do have a delay here. Oh, I have to re-sign into my broker here. Okay, 1 second, guys. I got to pull this off so I can sign back in. I thought there was something up. But yeah, you can watch here. You can see that little pink dot at 133.01 is showing you the current price. So there's your 133.01 or 133 quarter. And by the way, the apostrophes, don't worry about that. We'll get into that later. I'm just signing into my broker here, guys, because every new month the broker wants you to sign back in. Trading panel, choose your broker. Whoops. Okay, yeah, so we're seeing bond traders sort of accumulating liquidity on the lower end of the range right now. We can see that equity futures continue to probe lower. The NASDAQ is down about 0.4% here. About 59 handle decline here on the NASDAQ. By the way, guys, we're at the 2021 yearly opening range high, which is currently at 12,959.75 on the NASDAQ. So key inflection point here. Keep an eye on that. For those that know, for those that don't know, hopefully I will explain in the future what that all means. Actually, it's a good point. Did I get logged out of those as well? Perfect, there we go. Okie dokie. Get rid of this ladder for a second. So just to kind of touch on some technical items here. Once we develop those zones, we want to actually look at the development within the candlesticks and how their structures are responding to our technicals. So again, I said I wouldn't get too much into technical analysis here, but trend analysis is defined by basically drawing lines around where price is moving, and there tends to be a self-fulfilling prophecy. If you've ever read Technical Analysis of the Financial Markets by John Murphy, you can refer to a quote in the intro chapter where he describes the self-fulfilling prophecy. And what the self-fulfilling prophecy shows us is that when the same tools and structures are deployed into a market by the same people every day or every week or every month, there tends to be a sort of fractal response there where, if we're referring to fractality, if you take a snowflake and you put it under a microscope, you're going to see the same shape repeat itself over and over and over again in different shapes and sizes. That is the same sort of concept with markets, where because the same humans are transacting within the same markets around the same sort of developing cyclical economic structures, there tends to be a repetition in how these markets trade. And when you do technical analysis as a trained technician and another technical analyst does the same sort of style of tool use, you suddenly get a convergence in how many people are seeing the same thing at the same time, and therefore that leads to a reaction within that same place, and how people react is usually the same, or there's a change in context and that leads to a new level being potentially exposed. So in this case, we have this pink line here, we have this Fibonacci white line here, and we have this blue line here. That's currently our technical structure, if you will, where as a sort of, I wouldn't say too experienced, but relatively experienced technician, when and if the price comes down to this level, there's a significance to it. So if I go ahead and I open up the time frame a little bit here and I back it up and I really start to go back, you can see that pink line is actually labeled as a 2012 ITL. So for people out there who are interested in learning the methodology of technical analysis through the view of a CMT, a chartered market technician, you can learn about internal trend lines. And internal trend lines are basically, literally just trend lines that pass through the market and tend to get hit a few times. Now, let's say it's hit 3 times throughout a duration of a decade or more. The power of that level is actually more and more significant. So in this case, this 2012 internal trend line is an area of interest for me today, and I will be monitoring it closely. We kind of interlink that level with the relative value that has presented itself over the period of the last few trading days. So you could see at 132.22 is where this line exists, and we could see that we haven't traded as low yet. We've only traded at the 132.07 handle, and that is very significant because it's an excess area. So the fact that a 2012 internal trend line is just below this area of very poor traded liquidity is starting to interlink a potential area of significance, if you will. So because we move to and through and from liquidity, there is a chance that this tail, if you will, this lack of trade, could be an auction of interest, an area of interest, a price of interest, if you will, where buyers and sellers would like to facilitate trade. They'd like to buy and sell between each other. So that is how we use technical analysis. To be a little bit more specific, I see a lot of stuff on the internet about how to use technical analysis. I never really see kind of a more in-depth explanation other than, you know, if it's coming from CMTs themselves. But it should be noted that it is a relatively subjective sort of trade. It's not definitive. You know, this is an interpretive analysis, and indicators like RSI, MACDs, and all of that are also interpretive. So we want to layer our analysis with more than just charts. We want to layer it with volume profile. We want to layer it with ladder analysis and fundamental awareness. We're also getting market services PMI here in 1 minute and 18 seconds. So this is also an important data set that we need to keep an eye on here. And the number is seen at 58.9. And the composite is expected at 58.8, by the way. And that's coming out of the Reuters poll. So something that I'm glad we can capture here is when this economic data set comes in here, there's a good chance that we'll see a price fluctuation within the price of, to be redundant, of these markets. Give me a second here. I just need to get some of my other TradingView charts updated here because they log us out at the beginning of every month. Panel. 15 seconds still this number. Just a few seconds here till we get our data. 59.5 for the composite PMI and 59.8 for the services. So 0.1% contraction here on the services PMI. By the way, guys, services PMIs are an important part of GDP readings. So that is something the market's going to be paying attention to here. All right, let me just back check the price of the S&P here. So yeah, you can see that the treasury markets or the bond markets are starting to probe lower here. Let's go ahead and move this up a little higher. Yeah, there we go. So we've probed through the bear zone. The sellers are continuing to press the price lower, and we are looking at that 2012 ITL for a potential response. So if we see that price get hit, we're going to look for something to start responding here on the ladder. So you can see we're currently trading, roughly fairly low liquidity here between the 33,005 and the 3229. So that's the low of day. You're seeing a little bit of a bid trying to hold the price above on that contraction. $38.64. Okay, yeah, there does seem to be a delay on my other data. 1 second here, guys. All right, just keep an eye on this treasury bond here. So it looks like we're catching a little bit of a auction at this lower bound end of the range. And yeah, we'll get into the fast markets too. Don't worry. If for those of you that are like, wow, this market is so boring. Yeah, we'll get there. We will get there. We don't want to scare people, Ro. Clean my glasses. No, I can hear you, Ro. Can you hear me? Yeah, and hopefully as you know, we continue these streams this year, we'll get some more, you know, just like internal questions coming out of the Twitch channel. I mean, I could see right now we don't really have much viewers. It could just be our team, which is fine. But hopefully when people watch this back, you know, it'll start to create some kind of following or interest so that people can come in and ask more questions. But yeah, right now we're just kind of in the regular flows. Just ensuring that our systems are running appropriately. Yeah, I was. Exactly. Right. Yeah, it's such a good point. Right. Contango backwardation. They're just like, I'm out, bro. This is whack. This is. I'm gonna go back to Robin Hood. Mm-hmm. Yeah, I'm still looking at these lower bound. I just think we need to fill in. We need to fill in the wackiness, you know? And that 2012 ITL here is of such interest to me that I'm mentioning. Really curious to see if we just go ahead and probe it, the 23 handle. I mean, we're about 10 ticks away here. I like to, of course, this is the day that my computers decide to have like all kinds of technical difficulties. Okay, we're getting ISM, so this might be the move here. I mean, the fact that we're so close to hitting this level, could see a decline on the bond market here. Small bounce here on the equity market. Yeah. Did we get on ultras there? Yeah. You sound like a robot. Hey, what's up, Blue? Amazing. That'll definitely happen. Of course he carried in his way. Jimmy McMichael. Unbelievable, these people. Did Alex call you? He didn't call me. The markets are freaking out, you think? It looks like we were where we were at the closing range of the month. You're right. Oh, lovely. S. Just S. Just you're like trying to type something into the Discord and you're just like, order failed. Unbelievable. Did you change it? Yeah, it just keeps you in line. That's smart. Good. That's stuff we should talk about too in the streams. How to manage your risk using high technology platform. Yeah. Mm. Yeah, that's all you, Jimmy McMichael. I don't know how to do any of that. Okay, I don't know why my system just loves to go down when I'm in the middle of a stream. One of my computers is now down. Well, good thing we're just sitting here waiting for this bond market to decide what it's going to do after this series of data set, or this data set. 2 minutes and 40 seconds here till the ISM number. That's the big number for the day. Prior was 58.7 on the manufacturing PMI. Business accounting was 59.9, and manufacturing employment was at 55.2 prior. Reuters is pricing in 58.7 for the manufacturing PMI, which would be a flat reading from the prior. Just a few minutes until we get this data. Bar market's looking heavy this morning. I mean, you could see this 10-year is just like drifting. We're literally just a few ticks off now. So we're going to see this through here. Yeah, we're continuing to see offers hit into the bid here on these bonds, while the 30-year is currently trading at 2.26, which is up about it's actually down on the morning, about 7 bip here decline. But the 10-year is continuing to show more strength Currently trading at 1.47. Coming off that high from last week at 1.6 after we got that 7-year auction. Who's jumping in and out? Is that Drew? Is that you, Drew? All right, 90 seconds until the release of these ISM non-manufacturing numbers. That's what it looks like. Yeah, I've got a little trend line that's defending that like sort of weaker auction from last week on the S&P. I mean, we're right at the the first all-time high that we made of the year. Yeah, there it is. I don't have the ladder up, but I could see it coming into the level there. I have the ladder on. Yeah. I'm gonna cry right now, okay? I don't have all of the ladders up right now due to the obvious reason, but I can't get, I'm just not gonna make excuses. I got the treasury ladders up, huh? No, we were just. Yeah, right. No, we were just going through cross-market correlation here for this video or this stream. That's awesome. 55.3 for the ISM manufacturing. So that's extremely. Okay, I'm not going to be dramatic, but that's down 3.4. Okay, so there's your equity market coming off a little bit, but again, the technical structure is still showing that the bond market has a weaker or a heavier offer, if you will. So this is the lowest reading that we've had since May of last year. So that's an unexpected slowing in the ISM. Yeah, I think first we might retest that 2021 yearly opening range on the NASDAQ, which is 12,961. Well, let's see here. S&P coming into that 40. I don't listen to the NASDAQ. So it skips the first two numbers. Oh, that's awesome. Yeah, all you see is, yeah, that's cool. Instead of the jank jigsaw way where you just like slide the ladder so that it only shows the last three numbers. And by the way, guys, I got the footprint up here. Footprint just shows us what's actually traded through on the ladder. This just helps a lot. Yeah, so this kind of bolsters expectations that inflation is moving fast. So, at least from a real economy fundamentalist view, this is basically keeping a nice stabilization within the economic recovery. But of course, these futures markets are going to price in what they believe is happening in the future. Aha, who would have thought? Dude, Blue, I didn't know that Reuters had a social media monitor. Reuters has a social media monitor. So it just aggregates all the tweets that use ticker symbols and then puts a chart. I didn't know that. Yeah, it's awesome. I heard something running through the wires about him and the Winklehoff boss. What are their names? The twins. The twins from the Facebook saga. Yeah. Oh, absolutely. That'd be so funny, yeah. Okay, for the sake of everybody's sanity, we're going to go ahead and move over to a faster market here. But definitely keeping an eye on that 132.23. So let's talk about duration. One second, I'm getting a comment out of Amina back right here. Okay, more discussions are going to be held tomorrow on the OPEC meeting. Who keeps signing in and out? Is that you, Blue? Are you still there? Oh, your internet. Yeah, I guess it's not just me then. I'm having strange. Yeah, something's going on with the interweb. Okay, so this is 30-year duration. So this is going to be a little bit more volatile. To keep it as simple as possible, the longer out the duration of the bonds, the more volatile the asset because there's more uncertainty. So we don't know what's going to happen in 30 years. Therefore, price fluctuations are going to be a little bit more volatile. There's going to be more movement. So I'm going to pull up the 30-year structures here, do the same exact thing I just did. And the biggest thing to note, I would say, is, okay, February 25th, you put in a huge tail off of that 7-year note auction, which most of you probably don't know what the hell that is. Essentially, people auction at the government to get debt at a certain price, like we mentioned earlier. The bonds hit a yearly low on the 25th, and that's all you need to understand is we've hit a yearly low. We put in a very abrupt pricing and then came right back to an area where people were willing to trade more. So this is what we call an excess or a imbalance down, if you will, where there is not a lot of liquidity that has traded below that big node on the profile that I'm hovering over with my cursor. So when you see these kind of like long, they almost look like just, vertical lines, that's an area where no trade has really been facilitated. So the bond market coming off here, the structure allows us to look for interest in areas that have seen low interest. If you go to the store, you want to buy something, it's on sale, you know that some people got the deal, and now you're potentially getting the chance to get that deal. You might wait. You might wait to get involved there. Is that you, Rose, still just jumping in and out? I just hear, welcome. No, it is. I think it was Drew. Oh, nice. I'm talking to you guys through the non-Falcon. Yeah. Is the Falcon? Did it crash? Did the Falcon crash? On everything, though. That's the best part. Is literally on everything. Can someone just break the market, please? Yeah, we're sitting right on that internal trend line from pretty much the entire year of 2021 on the S&P 500. And we are just staring over a cliff on these 30-year durations as well. Yeah, we're basically filling out, one second. By the way, guys, we have ECB coming up. So any commentary out of the European Central Bank today is going to be significant, or this month. So we just got a comment out of ECB's DeGuindo saying that the full year growth won't be very different from the December baseline, so nothing really new there. But just to note, there is a lot of discussion right now in the fundamental kind of view that there's going to be a divergence between the Fed and the ECB, meaning that the euro could actually come off a bit while the dollar stabilizes. So looking for kind of a slow communication from the ECB as we get closer to that rate decision. Just a key item there to watch. So yeah, the 30-year structure is basically the same as the 10-year. It's just a little bit more embellished on the range, if you will. We have more of a price range to work with. Basically, just once again filling out this excess here from the February 25th monthly closing range. And now for Ro's favorite, we'll get into the BUB. And what is the BUB? Yeah, it's your favorite. Yeah, you could say that. How to short the lows. What? I can still hear you good. All right, you're seeing equity prices come off a bit after that lower than expected reading on the ISM manufacturing. So let's go ahead and take a look at these ultra bonds real quick, and then we'll jump into the equity market here. But essentially what we're looking at here is, I just got a notification. What was that? Liquidity. Yeah, so ultra bonds, I'd say watch for that break of 186.03 here for a potential declining issue to accelerate if the equity market does get picked up here. Otherwise, we're going to look for just a return back to balance where we kind of left that little pocket at 187.20 on the profile. But yeah, we'll jump back into that in a minute here. I want to look at these equities. Yes, the one and only. Yeah, nice little declining issue for sure. We've got that skyline down at, purple line support at 38.31. That's a key inflection that we're all watching here. Blue in the Discord is mentioning that there's a lack of liquidity that traded through that area on Monday when we had sort of this really strange profile play out. It was kind of like half double distribution, half like B-shaped short side liquidation. And now we're basically seeing the market trade within that node here that you can see where 38.36 and 38.54 are the inflections to the up or the down in balance. So 38.31 is the support that we are most focused on in terms of a downside point of interest, while the upside point of interest would essentially just be the initial balance range low of the day at 38.66. The current single print that we're seeing on the low of day is seeing a relatively larger than usual auction activity off of that lower number. So It is common for the market to come off a bit when these negative prints occur, especially if they're unexpected and they align with the technical significance, which is what I just explained. Insert study, where's my jigsaw ladder here? I like broke all of Gary's work this morning with his you know the lines that we make. No worries. Is it Peter Davies? And for those that care, 1 minute now until the Canadian bond rating fix. So hopefully, yeah, this will probably excite people to check out the S&P 500 ladder. Obviously, it's going to be a lot more exciting than the bond market. We like to save it for last, though, of course. Getting more comments out of the Windows here. Out of the ECB. So yeah, you guys can see here on the ladder on the S&P 500 that we're basically moving quite fast relative to those bond markets. What's that? You did take it. I heard you say it. Whether you clicked buy or sell or not, you took it. You knew it. So yeah, we're sitting right on that internal trend line that we've got there from, let's see, what do we got here? This is actually the Pfizer high internal trend line support. Yeah, and I think what's so awesome to see is like just the profile is responding so well to that liquid area, like you said, or liquidity, lack of liquidity area. You know, we just come into that weaker auction, start filling it out with some acceleration. 38.41 through 38.31 is, I think, a lot of liquidity wants to trade there. I don't have the full book right now, so sad, but I bet you there's lots of liquidity there. Yeah, for those watching the stream here, you can see that blue line there from the Pfizer internal trend line, it's responding here. So we are clearly seeing a bounce off of that level. And now we're coming into that implied support at 38.31 where we expect to see even more of a response. It looks like the bond market is trying to open this next candle higher. That noise isn't coming through on the Twitch, right? Okay, no, it's not. Look at that blue. Look at that beautiful response on that internal trend line. You some kind of CMT? some kind of aspiring CMT? Keep observing and collecting the proper information that you need to be successful. Doesn't that mean though that you did what you're supposed to? The dollar. Yeah, guys, since this is still a relatively new stream here, we're going to end it in 10 minutes here, which is the end of the clearing range in the US. So we'll keep it to like just a few hours every morning. Hopefully we'll start building some more of a following. I'm going to make an introductory video for people to jump into my YouTube channel, just kind of explaining what they should expect when seeing these streams. Just putting a little bit more specification on what exactly we do here and why. No, I need to do that. Can you just do that from being live already? Boomer. Stonks. When is Ricky Gutierrez going to raid my chat? Hey bud, here's 50,000 people. Oh yeah, I can't wait. Mm-mm. Are you referring to Gary Norden? Just kidding. Oh, lovely. 38.31's just a bit away here. Really seeing that response here on this upward sloping trend line. Yeah, today was kind of a just kind of as we go stream. So going into the development of this, probably going to focus on creating more of a format. Definitely going to start it earlier. We had some technical problems this morning, but we will cover or four asset classes within each realm. So for foreign exchange, commodities, equities, bonds. Kind of watch them develop through the pre-market into the opening range, into the closing of the trading hours at 10:30, to kind of create repetitive views of what happens when the market increases in volume. Like today, we got to see the S&P hit that Pfizer sloping support. I think if we start to trade through here, we're exposing that excess here, 38.31, that I think obviously you see blue. Looks like we're no, but you did. You did. Yeah, bro. I mean, amazing, dude. You're an animal. You're killing it. Look at this guy. He's natural. Wait, silver? What do you mean? Silver's down a tenth right now on the day. Really? I have 0.04%. What do you mean? No. This is like on the day. Wait, what are you guys seeing in terms of price? Yeah, no, I know. Yeah, that's exactly what I have. What? Okay, hold on. No. Your towel. Chasing or luring? All right, look at my stream on Discord, bro. You can see the bar change value up the top. It is? Hey, man. Oh, God. The microphone. Looks like something out of the what? Oh, right. Dude, I just see a little doji. I don't know what you guys are talking about. I mean, yeah, on the intraday, sure, but from this perspective, you're right. You're not wrong. I don't care. Look, we got the 9-hour chart here. Okay, we got our boy Ro in the Discord chat getting his underpants in a bunch here. Why does it not show that for me? Okay. On the 9-hour, I've got 2.57% decline. On the 16-hour, we've got really just 0.8. So it is. So then that would mean that yields are rising. Yeah. 13%. See, but okay, when the squawk runs, the squawk never says that. The squawk will never say 2 point whatever. It'll always say like what I just showed you, which is it'll be like it's up 0.8%, right? Have you noticed that? Especially trade the news. I think there's something about that. I think that's the standard. I'm telling you. We should boycott them. Yeah, we should sue. So yeah, we got Ro commenting here in the Discord about silver here, saying we're getting caboose. We are getting caboose, absolutely. And just to run people down on the metals market effect here. Okay, no worries. You're good. So just to close out here, since we got 2 minutes until the stream ends, what I'm going to leave you guys with, for those that watch this in the future, precious metals like silver and gold, base metals like copper, they also get affected by the overall market structure that bonds, currencies, and equities kind of create, that rock in the pond effect. So the fact that silver is dropping, it's going to give way to a rally in yields, because people are saying, okay, I don't need to get my yield from safe havens like silver and gold, which are real assets, hardline assets. They can go back to buying paper, buying money, which is the debt that the government sells. And therefore, the yield is going to go higher, and it's going to entice investors to jump into the bond market and try to get yield there. And to close out here, since we started with crude oil, we've got the crude oil inventory report coming in now. So we'll go ahead and just watch that play out in a minute here. So here's your crude oil. There's the ladder again for everybody. So this will be kind of the crescendo for the stream. So as soon as this number hits in just under a few seconds, we're going to see this ladder react pretty spastically. 20 seconds until the release. So we're expecting a draw of 928,000. Hello, kitty. So it's a build of 21.56 million. So you can see now that the crude oil ladder is moving pretty aggressively. So this is volatility. You have everybody who's basically pulled their liquidity and started to create a fluctuation in price that's much faster than what you saw. It should be noted too that there are algorithms, there are machines that are creating and embellishing this whole development. So definitely do not trade this until you have some experience. It can be very dangerous. So please, everything we talk about here is not advice. Just we're providing educational material. Yeah, trading derivatives is not suitable for let's throw a risk disclaimer at everybody real fast so nobody gets any ideas up their sleeve. But yeah, you can see like how quick price is now moving relative to how it was moving into the morning session. We've now created this like very large single print on the most current bar that is testing the balance from yesterday's low. We're in balance now actually from yesterday. So basically just went and rejected extension of value and have now just gone back and retreated. But yeah, that wraps up today's Twitch stream, everybody. For those that watch in the future, hopefully you can message me and inquire about anything that you're interested in. Thanks for those that watched and popped in. And we'll be back at it tomorrow at 6:30 Eastern for another rundown of these markets and how we trade them. And we hope to catch you all there. Whoops, that's the ending stream.